Have you ever applied for a phone connection, credit card, personal loan, home loan, or buy now pay later service and wondered why are they checking my credit or why you were rejected? Or maybe you have checked your credit report and found a number that you don't fully understand. Your credit report can have a major impact on your financial life. It can influence whether lenders approve your application, the interest rate you may receive, and sometimes how much credit is available to you. But what exactly is a credit report? What information does it contain? How do you read it? And what should you do if you find a mistake? And we are going to break down the credit report in a simple language in this video, from what it is and how it works to common mistakes that can hurt your credit profile and ruin your credit score. So let's get started. What is a credit report? A credit report is essentially a record of your borrowing and repayment history. Think of it as a financial report that shows lenders how you have handled credit in the past. When you borrow money from a bank or a financial institution, information about that credit account may be reported to a credit bureau. The report can include details such as your credit accounts, outstanding balances, repayment history, credit limits, and applications for new credit. In India, credit information is maintained by credit information companies mandated by RBI, commonly known as credit bureaus. One of the best known credit bureaus is CIBIL, but there are other credit bureaus as well. So you might have heard your friends and family members, including your relatives, speaking about CIBIL score and their CIBIL score report being screwed. So next time you hear anyone speaking about CIBIL score, just remind them that there are other credit bureaus as well. And CIBIL is not the only company which is maintaining your credit history. Your credit report and your credit score are related, but they are not exactly the same thing. Your credit report contains the detailed information. Your credit score is a numerical summary generated from information in your credit history. So when someone says check your credit, they may actually be talking about two things: the detailed report and the score calculated from that information. Why is your credit report so important? Why should you care about your credit report? That is because lenders use the credit information to assess risk of lending money to you. Suppose two people apply for the same loan. One person has consistently paid their EMIs and credit card bills on time. The other person has missed several payments and currently has a large amount of outstanding debt. A lender may view these two applicants very differently. Your credit history doesn't automatically determine whether you will get a loan. Banks and financial institutions can consider many other factors, including income, employment, existing obligations, and their own lending policies. But your credit profile can still be an important part of the decision. A strong credit history can make you look like a more responsible buyer. A problematic credit history can make borrowing more difficult and potentially more expensive, as they are going to charge you more interest for lending money to you. That is why checking your credit report periodically is a smart financial habit which you should inculcate. What is inside a credit report? Now let's look at the main sections you will typically find in a credit report. In personal information, the first section may contain identifying information such as your name, date of birth, contact information, that is your contact number and email ID, and other details used to match your credit accounts to you. It is important to make sure that this information is accurate. If you see someone else's information or unfamiliar identity detail, don't ignore it. And this might be because you're using the SIM card which was previously used by another person, and after that person died or he or she gave the connection back to the company, they might have reissued that to you, and that was reflected in your credit report. Next, you usually see information about your credit accounts. This can include credit cards, personal loans, home loans, vehicle loans, and other types of credit, including buy now pay later services nowadays. For each account, you may see information such as the lender, account type, account status, outstanding balances, and payment history. Payment history is one of the most important sections. It shows whether your payments were made according to the terms of the credit agreement. A history of timely payments generally looks much better than repeated late or missed payments. For example, imagine you have a credit card bill due every month. If you consistently make your required payments on time, your payment history can reflect that. But if you repeatedly make payments after the due date, those delinquencies can appear in your credit history. Credit utilization. For revolving credit, such as credit cards, another important concept is credit utilization. This refers to how much of your available credit you're using. If you're using really less amount of credit given to you, or you're not using the credit which is given to you by the lender, your credit score will go down. So, using a large portion of your available credit may be viewed less favorably by many credit scoring models than using a smaller portion. But don't obsess over a specific percentage as though it is a universal rule. Different scoring systems can work differently, but across the world it is said that 30% of your credit limit can be used, and above that will be viewed by the credit scoring system unfavorably. And nowadays they are using artificial intelligence to assess whether they have to lend money to you or not, or even if they are lending money, what is the risk. Credit inquiries. Your report may also show inquiries made when you apply for credit. If you apply for several loans or credit cards within a short period of time, multiple credit inquiries may appear. So these are called hard inquiries. And if you are checking your credit score or you are downloading your credit report from a credit bureau, these are known as soft inquiries. And hard inquiries, a number of them in a short period of time will affect your credit score, because the credit scoring system will think that you are hungry for credit and you might not have the money to pay it back. And your soft inquiries will not affect your credit score even by 1%, because it is you who is checking your credit score. So you should avoid applying for credit unnecessarily, or think before applying for credit, and think before, and once in 4 months you can apply for another credit card or another loan. Credit report versus credit score. Let's clear up one of the biggest misunderstandings. Your credit report is not your credit score. Imagine your credit report as a book. The book contains your credit accounts, payment history, balances, enquiries, and other information. Your credit score is more like a summary number calculated using information from that book. The score can make it easier for lenders to quickly assess credit risk while the report provides the underlying details. This is important because if your score changes, you shouldn't simply stare at the number. You should look at the information behind it. Did a balance increase? Was a payment reported late? Was a new account opened? Did a credit inquiry appear? Checking the credit report can help you understand what may be affecting your credit profile. What can affect your credit profile negatively? Let's talk about some common behaviors that can affect your credit history negatively. Missing payments. This is one of the biggest problems. If you have a loan EMI or credit card payment, make sure that you understand the due date and payment requirements. Even one missed payment can become a problem. So, setting up reminders or automatic payments can help. But I am not a big fan of auto pay, whether it is UPI auto pay or net banking auto pay, because you may or may not have the required balance and you need to pay the charges for bouncing of auto pay. So it is better to set reminders for paying the credit card bill or for paying the EMI of buy now pay later or the loan. Carrying too much debt, having multiple loans or large outstanding balances can make your financial situation more difficult, as credit scoring systems see your income and the credit availed by you. Remember, getting approved for credit doesn't necessarily mean that you should use all of it. Borrow only what you can realistically pay. And if you are using your credit card for your friend's purchases and he is doing a really big purchase, make sure to pay it before the due date or as soon as possible, because it might make you credit hungry in front of the lenders. So be careful appearing for too many credit. Repeatedly applying for credit within a short period can result in multiple inquiries. So first compare your options and apply selectively. It is most commonly found when people are applying for credit card. They just apply for one credit card, then they will not use it. They will return the credit card to the bank, then apply another one because they found a better offer. Closing old accounts without understanding the impact. I have been a victim of it. I just closed my old credit card and my credit score dropped, and I had not even swiped the credit card even once. So even that affected because my credit utilization rate was 0%. So the credit scoring system thought he's not using credit, so um, he doesn't need that much of credit. Some people assume that closing an old account is always good, but that is not necessarily true. So when you are getting your first credit card, get a lifetime free credit card. You just need to spend the required amount of money using that credit card within a specific period of time, 3 to 6 months. as specified by your lender, then it is lifetime free. You don't need to pay your annual maintenance charges. So that is better, because when you upgrade to higher level credit cards, you don't need to pay the annual maintenance charges of the credit card which was first used by you. And you can use a bit of the credit card also, so that your credit score won't go down. And don't make major credit decisions based on a single rule that you saw online or that your friend or relative told you. Ignoring your credit report. Perhaps the biggest mistake is simply never checking it. Errors can happen, and if you don't review your report, you may not notice incorrect information until you are applying for an important loan. What if there is a mistake or a loan which you have not taken? Now let's say you are checking your credit report and you find something that doesn't look right. Maybe there is an account that you don't recognize. That was because maybe somebody fraudulently took loan or availed credit card in your name and they were using it. Maybe the balance is incorrect, or maybe you have paid a loan but it is still showing as outstanding. It normally happens when the borrowers don't get a certificate from the bank or lender stating that they have paid the loan in full and they don't have any other balances. So whenever you are going to pay the last EMI, you just contact the lender and get the certificate. Or perhaps a payment which is marked late, even though you believe that you paid it on time. Don't panic. First, carefully review the information and gather supporting documents. This could include payment receipts, bank statements, loan closure documents, or correspondence from the lender. Then contact the relevant lender or credit bureau and follow the official dispute or correction process. The important thing is to provide accurate information and supporting evidence, and don't assume that every negative entry is an error simply because you don't like seeing it. You might have done something and forgot. A legitimate late payment generally cannot be removed because you dispute it. The goal is accuracy, not artificially improving your report. And nowadays, since everything is digitalized, even the bank officials can't do much beyond the process because AI is monitoring everything. So, if you see an account that you genuinely did not open, please treat it seriously because it could potentially indicate identity theft or unauthorized activity, and you need to report that to police as well. How often should you check your credit report? This is what a number of people don't understand, and they check only once in a year, which is a bit too late if their credit score has gone down because of the mistakes or due to identity theft. So there is no universal magic rule, but checking your credit report periodically can help you catch errors, unfamiliar accounts, and unexpected changes early. And you should also consider checking it before making an important credit application. In normally most of the countries have four credit bureaus. So once in every 3 months from a credit bureau you can check your credit report. You can download it and keep it for extensively checking it properly. And don't fall for any ads. Go to the legitimate website of the credit bureau and download the report from there. Don't use third party apps to check your credit score or your credit report, because then you will be bombarded by ads from the third party apps. So you For every 3 months from one credit bureau you can download your report, and from another 3 months or the next quarter you can use the other credit bureau to download your credit report. And by the end of the year you will have all the four credit bureaus reports, and you can see whether in all the credit reports your information is accurate. And it is not necessarily that the credit scores in the four credit bureaus will be the same, because the credit score will be bit different for everyone in all the four credit bureaus, as not all lenders report to them. So if you are planning to apply for a home loan in near future, reviewing your credit profile ahead of time gives you an opportunity to identify and address potential problems. So you should not wait until the day before submitting a major loan application. And don't let your friends and relatives to check your credit report. They might handle your personal data in a way where identity theft might happen. They might have stored it on their WhatsApp or on their email, and identity theft might happen. So you go to the credit bureau and download it yourself. And how to build a strong credit history. You need to pay on time, and it is extremely important. So whenever you get a credit card or you use a buy now pay later service, you just put a reminder some 3 days before the due date and pay it. Or if you have sufficient funds in your account, and you are the person whose bank balance has never went below the minimum balance required by the bank, in your savings account you can put auto pay. But I am not a fan of auto pay, honestly. You Rule number 2 is keep the debt manageable. Just don't borrow because credit is available or that you get reward points. And before taking a loan or a credit report, ask yourself, am I comfortable in repaying this? Do I need this goods or service? Rule number 3, be careful with credit cards. A credit card can be a useful financial tool, but it is not free money. Because if you spend 50,000 rupees on a credit card, you have to repay it. So it is not that your money is going to be debited from your bank account. It is bank's money which you are going to repay in a month's time. So treat your credit card like a payment method and not an excuse to spend beyond your budget. Fourth, limit unnecessary application before availing buy now pay later scheme or a credit card or a loan. Just compare the options available in the market and apply where it is appropriate, because nowadays buy now pay later schemes are more famous than credit cards. So in most of the e-commerce apps they're giving a good amount of discount if you use it. So it is just like uh, using debit card on apps where it is saved and money just gets debited after autofilling of the OTPs. So just keep a track of for how many buy now pay later schemes you have applied, or at least make a note in a Word document or in a book at what date you have applied for buy now pay later schemes or credit cards. Because these hard inquiries may reduce your credit score. And be patient. Building a strong credit history doesn't happen overnight. So if you don't have a credit card now, it is high time for you to buy one. If your expenses are a bit high, or you are living in an area where credit cards are accepted and you can make large payments, because buying a credit card and it having 1 lakh rupees limit and you using only 2 or 3,000 rupees will reduce your credit score, and the reward points will not make it attractive for you to use that credit card. So having no debt automatically means I have a perfect credit score. It is a myth, because credit scoring depends on the information available and a credit scoring model being used. And you don't need to pay interest just to demonstrate responsible credit behavior. So you don't need to pay interest on loans to increase your credit score. Doing your payments on time is what is required to build a healthy credit score. And if you get any email or SMS that there is a secret trick to instantly increase your score, please don't click on it. In this world, there is nothing like that. So, even if you don't have a credit card, every 3 months from a credit bureau, check your credit report, because due to identity theft nowadays, people who don't have a credit card, the fraudsters are availing credit cards in their names and their credit report is getting screwed. So you need to be skeptical of it, and you need to be cautious of it. And most importantly, don't think about your credit score just as a number. Think about it as a part of your overall financial health, and get the error or the credit card or a buy now pay later scheme which you have not availed investigated as soon as possible. And your credit report may seem complicated at first, but once you understand the basic sections, it becomes much easier to read and monitor. Remember, your good credit score is not built by one big action. And please don't upload your credit report or tell the AI model like Gemini, ChatGPT, etc., what your credit score is, because it is your private data. It is like giving keys to your house to a robot. And if this video helped you understand credit reports, hit the like button, subscribe to the channel, share this video with someone who needs to understand their credit report. Thanks for watching, and I'll see you in the next video.